Hello, my name is Ian Alden. I'm an attorney here with Law for Small Business, and I'm here today to talk to you about pass-through entities, what they are and how they can work for you. Now, to understand a pass-through entity, it's first important to understand what a traditional corporation is, and specifically how it's taxed. Before the 1970s, when LLCs became prevalent, corporations were used by just about every business owner. Now, a corporation, it's what's called a double tax entity because income is taxed twice. Once to the corporation at its corporate tax rate, which used to be 35%, now it's 21%, and then again to the owners or shareholders of the corporation when that income is paid out in the form of a dividend. Double tax on the same income. Pass-through entities, which include certain kinds of corporations like subchapter S corporations, as well as partnerships, sole proprietorships, and most LLCs or limited liability companies. Pass-through entities do not have double taxation because the entities don't pay taxes on the income that comes through them. All the profits and losses of a pass-through entity will pass right through that entity to the owners, who will then pay taxes at their personal tax rates. That's why it's called a pass-through entity, because all the profits and losses just pass through. Obviously, if you're looking at this just as a numbers game, pass-through entities are very attractive for most business owners because if you're paying double tax on the same income, that's less money in the owner's pockets at the end of the day. So there's that going for pass-through entities, but there's also a few logistical things going for them, like pass-through entities don't have to file their own tax returns or pay their own taxes. They might file information returns in the case of a partnership or an S corporation, but they're not actually paying taxes at the entity level, and so the reporting obligations are typically a bit simpler. However, there are some drawbacks to pass-through entities that make them less than attractive for certain business owners. For example, if you're a business owner with a lot of income in any given year and you want to be able to time the income that you're getting from your business, a pass-through entity isn't going to work because you're allocated all of the profits and losses of your company right as they come through the door. So there's no way for you to time that. But if you're using a traditional C corporation, the double tax entity, all the money flows right into the corporation pays taxes on it, and that money sits with the corporation. So the owners don't have to report that income on their personal tax returns until such time as that income is then paid out by the corporation in a form of a dividend, which can be timed by the corporation and its owners. Similarly, a corporation might work better for any business owner looking to get investment, especially venture capital investment. And there's a pretty simple reason why investors and venture capital investors don't like pass-through entities. And that's because with a pass-through entity, again, any profits and losses are passed right through to the owners, including investors with an ownership stake, right when the money comes through the door, even if that money itself isn't distributed out to the owners. So you could be in a situation as an investor in a pass-through entity where you are being taxed on income that you're not personally seeing or receiving. That doesn't work for a lot of investors, and so venture capital investors will typically insist on a C corporation with its double taxation and a few other benefits such as multiple classes of stock, which can treat investors better than owners, things like that. So there's a lot of nuances here with pass-through entities that it's important to be aware of as a business owner, but really, at the end of the day, every business is different, every business owner's situation is different, and what you need is very dependent on what it is that you're looking for. So if you're unsure whether or not a pass-through entity is going to work for you, I'd recommend that you reach out to one of our attorneys. We'd be more than happy to sit down with you either in person or over the phone and discuss your business situation and what kind of entity would work best for you. So give us a call or send us an email or visit our website today. We'd be happy to sit down with you.